Okay, imagine the whole e-commerce sector is basically hyperventilating over the consumer pulling back, and then you have a pet company just casually locking 84% of its total revenue into recurring subscriptions. Welcome to Earnings Unscripted, everyone. Today is March 25th, 2026, and we are unpacking Chewy's fourth quarter 2025 results. The ticker is CHWY. Mira, this is a seriously weird mix of a quarter, isn't it?
It really is. I mean, on the surface, the top line looks completely fine. Net sales came in at $3.26 billion, but the actual operating income basically fell off a cliff. It dropped roughly 35% sequentially to $42.5 million.
Right, and gross margin ticked down slightly to 29.4%. Actually, wait, before we tear into the profitability, I should just quickly say that this is not financial advice. We are just sharing our personal opinions here, so please do not remodel your portfolio based on our banter. Anyway, back to the margin bleed. Are we just looking at standard holiday discounting here?
Mostly, yeah. The fourth quarter always requires heavier marketing and promos, but the real paradox here is the bottom line. Adjusted earnings came in at 27 cents a share. Now, that is down from 32 cents last quarter, but Wall Street was somehow only modeling 9 cents. So they beat the street by 200% while simultaneously shrinking sequentially. It is quite the optical illusion.
Geez, a 200% beat is, not exactly a minor rounding error. And they generated a massive pile of cash alongside it, like $232 million in free cash flow this quarter alone, which is wild to me. Selling bulk dog food online was always supposed to be this completely miserable, low-margin trap.
Right, except they are barely a standard retailer anymore. They're monetizing their ad platform and driving high-margin vet care now. And honestly, the market finally gave them a pass on the seasonal costs. The stock had a fairly brutal sell-off back in January, closing the fiscal quarter way down at the absolute period low of $29.11. But entering earnings yesterday around $24, we saw this huge, sharp pre-market spike.
Oh yeah, I saw that. It jumped like $2 right before the call.
Exactly, and it held. It stabilized through the regular session and closed up 2.37% at $26.57. So Wall Street is clearly rewarding the underlying leverage and ignoring the seasonal noise.
Okay, that makes perfect sense. They're forgiving the fourth quarter expenses because the Autoship Foundation is practically bulletproof right now. Plus, there's this amazing little detail in the transcript about literal humanoids running their warehouses. I mean, we cannot ignore that. All right, let us get into the details.
We really can't. And honestly, it sounds like sci-fi, but it is rooted in some very brutal e-commerce math. Look, Sumit Singh basically casually dropped the humanoid bomb on the call. He pointed out that 60% of their variable cost is just spent on picking and packing. Just humans physically grabbing a bag of kibble, putting it in a box. So he explicitly said, quote, "Over the long term, we believe we're a pretty good case for when humanoids essentially come to life."
Wait, he actually used the word humanoids. That wasn't just analyst slang.
No, his exact word, humanoids. Because, if you think about warehouse robotics, historically, they're usually these flat little Roombas moving pallets around, but Chewy needs bipedal machines that can reach up to a shelf, grab a weirdly shaped squeaky toy, and then go pick up a 40-pound bag of dog food.
Which is a surprisingly complex motor skill for a machine. But I guess if you solve that, your margin ceiling completely breaks open.
Exactly. Right now, they're bound by the physics of human labor in these massive fulfillment centers. If you swap that out for a humanoid fleet that doesn't sleep or take lunch breaks, the operating leverage becomes astronomical down the line. But we don't have to wait for the androids to see the AI impact. They are already penciling in hard dollars today.
Right. I saw they put an actual timeline on AI cost savings, which is so refreshing because usually CEOs just wave their hands and say, AI is the future, without giving us a number.
Yeah, the vagueness is usually a red flag, but Sumit actually committed to a low tens of millions of dollars benefit in 2026. The step up is actually in 2027. He expects it to reach approximately $50 million annually by then. And this isn't just a chatbot writing marketing emails. They are using computer vision in the fulfillment centers right now.
Okay, how does that work? Like cameras tracking boxes?
It is actually way more specific than that. Think about the pharmacy side. Chewy processes a ton of pet prescriptions. Those come in as handwritten notes from a vet. maybe faxed, maybe a bad scan. Historically, a human pharmacist has to sit there, squint at this garbled handwriting, figure out the dosage, and clear it.
Oh, wow. I can barely read my own vet's handwriting. That has to be a massive bottleneck.
That is a huge bottleneck. So they deployed AI-powered computer vision specifically to autonomously read these scripts. It decodes the handwriting, codifies it, and basically tees it up for the pharmacist to just approve. It slices human review time into fractions of what it used to be, while actually improving safety.
That is so clever. Because you don't really think about a pet store needing cutting-edge medical AI. But when your volume is this high, just saving 2 minutes per prescription probably translates to millions in overhead.
Yeah, and they did something similar with their call centers. About 8 weeks ago, they rolled out this self-service returns feature natively on the app. And normally, returns are this massive drain on customer service reps. They just flooded the lines. But the new system shifted all that volume. Management called it an outsized return in efficiency.
And Chewy is so famous for their customer service, like sending flowers when a pet passes away. You wouldn't want to automate away the white glove touch, but moving the boring stuff, like a wrong size harness return, over to an app, that protects the humans to do the empathetic work.
I think that is the crux of their whole AI philosophy right now. They even talked about this idea of agentic commerce, which, to be honest, usually terrifies retailers.
Yeah, because if an AI agent is shopping for me, it is just going to scrape the internet for the absolute cheapest bag of Purina. There is no loyalty.
Exactly. It commoditizes everything. But Chewy thinks they are insulated from that. Suman argued that pet care is a deeply emotional category. It relies on trust and relationships and integrated vet care data. They basically believe that when AI agents start doing the shopping, Chewy will just become the trusted distribution channel the AI defaults to, because the profile is already locked in.
Huh. So instead of being disintermediated, they just become the infrastructure.
Right. Although I will say it is a very confident assumption. I might be overthinking this, but relying on consumer loyalty to beat convenience is always a dangerous game, especially when an algorithm is doing the buying.
Fair point. Loyalty is fickle when inflation is involved. So, considering all these operational experiments and the automation push, what does the actual trajectory look like? Where does this leave them heading into next quarter?
Well, look, the guidance for Q1 it's actually pretty sober. They are calling for net sales between 3.33 and 3.36 billion, which is, roughly 7 to 8% growth year over year. Management basically told us this will be the low point of the year from a growth perspective.
Okay, so they are setting a firm floor early on. That feels like a classic under-promise setup for the rest of fiscal 26.
Exactly. And for the full year, they expect around 13.6 to 13.75 billion. But here is the genuinely surprising part. The new CFO, Chris Deep, explicitly stated, quote, "Our forecast assumes no price inflation in 2026.
Wow. Zero inflation help? That is a highly confident baseline. They are essentially saying they will manufacture all their profitability purely on operational muscle.
Right. They're pivoting away from relying on gross margin gains. Now they expect to pull that margin leverage entirely through SG&A contraction and AI efficiencies. If they actually pull that off without the macro wind at their backs, I have to give them credit. It is an extremely disciplined model. Sorry, I was going to say, except for one strange little detail.
I knew there had to be a catch. What is it?
The Smart Equine acquisition. They just closed that in Q3, and on the call, they expected to contribute $80 million to the top line, but absolutely zero bottom line contribution this year. Management actually admitted it needs a little bit of fixing.
A little bit of fixing. That is usually just polite corporate code for a short-term money pit.
Pretty much. It feels like the one loose thread in an otherwise airtight story. But if you zoom out, looking at that 84% auto ship rate, the physical vet clinic expansions, the automated warehouses, Chewy proves pet e-commerce is not a pandemic hangover anymore. It behaves more like an infrastructure utility.
It really does. It kind of feels like they're a healthcare and robotics company just disguised as a website that sells cat treats.
Yeah, just biding their time until the humanoids take over the loading docks.
Let's just hope the humanoids like dogs. All right, I think that brings us to the end of the line today. Thanks so much for joining us to break this down, everyone.
Thanks for listening. We'll catch you after the next call.
If you want these earnings deep dives to just show up for you, making this feed a regular habit is the easiest way to do it. And as a quick aside, this entire podcast is actually brought to life using AI tools, which is how we are able to synthesize all these massive financial reports so fast. We would love to know what companies you want us to look at next, so feel free to email your ticker requests to earningsunscripted@datamadness.ca or just find the X link down in the show notes.
See you next time.